Hey everyone, good afternoon. It is 2 o'clock on Tuesday afternoon. I'm going to go ahead and shoot this as a recording here this afternoon in lieu of doing it live tomorrow morning. I hope everyone's okay with that. I know people are busy and going to be scooting around. So if if we do this and something changes radically in the market and we need to shoot another update, I'll do that and let everybody know. But I don't think anything's going to happen on Wednesday before Thanksgiving or even Friday necessarily. We expect the volumes to decline as traders get out for the break. There's a chance that things could get volatile just off thin volume, but I don't think we're going to see anything real significant, with the exception of maybe December corn. There are 25,000 contracts of open interest at $6 December corn, and those options expire on Friday. So there's a chance that we could see corn go ahead and accelerate up to put pressure on those $6 calls that are open. I don't know that that'll happen, but in thin volume with big traders, if they want to get after each other, it could. So if it does, I think it just kind of confirms what we're looking at here on this chart, which is you've seen this trend line. We drew it last week, connecting the two peaks from earlier this summer, from May and June. Today we finally closed above it. We've failed at it, multiple times over the last 3 weeks. We've just been poking on it, and it's met with selling every time until the close today. And I think that's really significant because if it does go ahead and accelerate higher, it just is consistent with everything else that we're seeing, from the cash basis to all the fundamental news that we're reading out of South America, with it being a little bit drier. Maybe traders are getting a little bit nervous down there. You've got just issues all over the globe with food supply. And then you have oil and ethanol margins just continuing to get better, not worse. So I think this breakout really could be the real deal, which is why we wanted everyone to get out to March. So what we're going to do here for a few minutes is just kind of have an open discussion about where we think we're going. The last 6 months have been pretty painful. I mean, we've gone nowhere and we've gone everywhere, right? We've gone around the world between 5 and 6 several different times. We kept trying to break below 5 and we just couldn't do it. And so now here we are trading 580 after harvesting the largest yielding crop on record, according to the USDA. And we haven't exported or had any new export sales in 6 months for corn. So it doesn't make sense. If you have a huge crop and you have bad demand and a soaring dollar, why are we $1 higher than we were 1 year ago today? Let's look at that, right? Back up to last November, and we're at 411, and here we are at 580 today. So let's look at that again. Here's $4.14, 411-ish at the end of last November, and here we are at 580. So you've seen a massive change. And let's back out to the daily continuations. You can see that there too. Here we are at 580, and a year ago, last November, on the continuation chart, we're at 423. So $1.60 higher at the same time of year, with no exports for 6 months, a soaring dollar, with the largest crop on record. Something's going on here that we have not quite gotten to put together, and I don't know exactly what that is, but something is amiss. And I think that's going to be resolved to the upside because we just seem to be too reluctant to sell this market. I'm back on December corn here. So that's December, right? I don't see any reason to do any selling there. That's why we've moved everybody out to March. March, if you look at the same trend lines, we have yet to break it to the upside, but we're just gaining some steam. This is a really strong little setup right here. I wouldn't be a bit surprised to see us poke on up and be above 6 very, very soon. I don't have a whole lot to say about corn except for I don't know when you're going to step in and sell it. You know, if you run projections off of this setup, and I'll do that for you real quick. If you run projections off of this setup from here, you know, 660 is a target. If you back up and run them off of here, you're much, much higher. You're at 690, 722, and 810 off of projections, working off of this peak to this low, which is where you'd want to do so. So as you put Fibonacci projections out in front of corn, you gotta kind of catch your breath and realize that we could be in for a very interesting winter. If you read commentators and you read everybody, literally everybody's going to talk about selling, and I don't disagree that we can't let it get away from us, right? We've got to protect it, we've got to defend it, but I don't know when you sell it, because you know, look at cotton. And, you know, I was talking to guys a year ago, and man, anything over 70, that's a good number, right? Oh my gosh, $80 cotton, that's unbelievable. Well, we're at 120, and we've been consolidating now for 3 weeks, and we haven't broken that market either. Now, we will break at some point in time, but I don't know that that time is now, especially not where corn is, and not where the rest of the minor crops are. They all seem to be breaking out higher, not lower. So when you stop to think about selling this stuff, I think you got to be really careful about jumping out too fast in front of December corn. You know, this is your DEES 22 contract. You know, here we are out to new highs today. You've got no signs of weakness on this chart, although it looks like it may be getting a little bit mature. There's nothing that says that you can't explode it higher and then get a 3-wave correction before you work it even more. So I don't think that the time is ripe to sell. I mean, we've just broken above all of this resistance right in here. We came down and tested it, right? So you've got 1, 2, you can kind of call that the same range. 4 different times it took to poke through it. It broke up on top. It immediately came back down and tested. And now here we go to new highs. That's a long base. You know, that base was built from May all the way through October. That's a long base of support now for this market to work from, and it could really get legs and extend on higher if it if something were to change. And I don't know what that is. Maybe that's South America. Maybe that's China coming back to the table to buy it. Maybe we don't have the supplies here that we thought we did. But December corn, March corn, December 21 corn, all 3 are telling you the same thing, which is don't sell me today. I'm probably odds favor much higher prices here in the near future. That's further supported when we look at wheat. You know, here's March wheat. We've been hammering the bullish wheat tune for a long time, and there's nothing to stand in the way of that. You know, wheat gets harvested like 10 months out of the year, and the next 60 days are the only 2 months that there isn't a wheat harvest going on somewhere in the world, generally. So you've got a lack of new supply coming to the market. You've got our beginning conditions as low as they've been. You know, I think they're like 5th worst or something like that. So you've got poor conditions on our side. You've got tightening global supplies, and you've got the world concerned about inflation. So wheat could just be picking up and accelerating higher, well north of $9 here very soon. So when do you step in front of this one and sell it? You know, if I back this out to a monthly chart, okay, so bear with me. This is a monthly continuation chart. This is 2001 over here on the side. This is the all-time high in March of 08. And then here is 2011. Here's 2012. Okay. So here we are charging up higher into these highs of 11 and 12, and it doesn't look like we're getting anywhere near slowing down. This formation right here, where you have 3 consecutive bars of bigger full bodies, it's what's called a 3 white soldier formation, which is a buy signal in and of itself. So, and this is on a monthly chart. So you could easily see wheat poke right up into this 945, 950 area. And can we stall there and call it quits? Yeah, you bet. We absolutely could. But the reality is we're probably more likely to come on up to this 1030 range and challenge these full bodies back in here. And depending what corn does, wheat could really accelerate on higher. Am I saying that the fundamentals support that today? No. Are we talking about something that has a low probability? Well, maybe. We probably are. But I don't know when you step in and sell this thing for 22. I wouldn't sell this with anybody's money at the moment, because we could easily just blow right on through it like cotton did. When you see those charts, cotton, oats, you look at some of those charts and you think, whoa, could that possibly happen on some of these major crops? And I think the market is telling you, yeah, it very well could. And so you got to be really careful. You'll read a lot of reports of guys saying, oh, we're way overbought on the RSIs and the force indexes. And yeah, we're definitely in bull market territory. But the thing about an oscillator, which is what these are, is that they're not trend following indicators other than to recognize when the trend is really, really strong. And so when you see the force index up above the 0 line and with a vertical slope, and you see the RSI up into the overbought territory, this is the first month that we've been overbought and on the RSI. When you see those things happen, there's no rule that says they can't stay overbought for a really long period of time. Stochastics are another oscillator. Look over here. In February of 06 and in March of 06, they were overbought on the stochastics and the RSI for all of 06 into 07, and then for most of 07 before they ended up peaking. So they can stay overbought a long, long time before these markets break. And so I would be real hesitant to buy into the thought process that, well, they're overbought, therefore they're going to go down, because I just don't think that's true. I think we've got to have something else. So I think the thing to think about in the debate for the next month and a half, 2 months, is what are we going to do with these two tops? Are we going to sell cash and re-own calls? Are we going to sell futures and own cash? Are we going to manage it? Or are we just going to hold our cash and buy puts with it? I think that's the discussion that we've got to be having about what fits best in Kansas City wheat. Probably the same discussion what we need to do in corn, although I'm even less likely to sell it given the length and strength of this base that's been formed here. Yes, even though these were all tops, today it's a base. It's a giant shelf. And it's like the tip of the iceberg, right? You've got all this activity down here that's supportive of it. So if this is the tip of the iceberg, this is everything supporting it underneath it. So you've got a tremendous amount of inertia if you're going to break corn or wheat, is my point. So I think going into Thanksgiving, you got to lean towards the bullish side of things. Soybeans. All right, soybeans, take the same approach, right? Connect the peak in June to the peak in July, and connect your trend lines. And this week we finally broke above it. We threatened it for several weeks and we finally did it. And the fundamentals here are really stinky, right? Huge crop, maybe a crop getting bigger. We've had export demand way below the pace, or the export sales below what the market wants. But then you look at the export pace of what we're actually shipping, and it's above expectations. You look at the cash basis levels, and you think, well, maybe we don't have the beans that they said we have. And then you got to think, well, where are we in relationship to a year ago? And let's go back to our monthly continuation chart, right? Here we are. Here's 2020 right here. Here's the last time we were trading a balance sheet anywhere near where we're talking right in here, which is at 300-400 million. And yet we have a monthly massive outside bar up, a massive key reversal from the low at $12. You've got a force index that's really strong with no divergences all the way down into the buy zone. You look at your weekly chart on your continuation side, you've got a massive key reversal that happened 3 weeks ago with 2 weeks of follow through. The bulls reasserting themselves on your force index. Everything about this is a go signal. You've got it in a wave 2 position, not a wave 3 or 5, which is a buy signal. And then you've got the more nearby action, which is just pointing more bullish. So then you look at soy meal. Come on, here's soy meal. This has been the dead market for a long time, and everyone's been saying, oh, an oil-led rally can't be trusted. You can't make that your foundation for buying soybeans. And so now here we are, and our crush margins are as wide as they've ever been at near $3 a bushel, and getting stronger. And meal is just beginning a nice move to the upside. So yeah, it was a little bit weak today, but this is all now support. So anything above these lows, meal is working higher and could easily be back up here in the $400 a ton range, relatively soon. So with meal exploding, with oil continuing to get stronger and building a new base, just like corn and wheat did, you've got and soybeans, you've got all these markets poised to turn around and rally. And you look at the crude oil market, right? President Biden decided to go ahead and release some supply out of our strategic reserves, and the market turned around and rallied after selling off for a few days behind that. Just goes to support the argument that the more action that the Fed takes to combat inflation, the more attention that it draws to it, which in turn reinforces the need to hedge against it, which could really push money into these commodity markets. So I'm a little surprised, to be perfectly blunt, that on November 23rd the markets have shifted to be as bullish as they are, without more news coming to light. And I think moving forward between now and Christmas, we need to take a really honest look at how we're going to trade this. For now, my bias is just hold new crop. Don't do anything with it. Don't hedge it. Don't sell it. Just let the market tell you what it wants to do. We're at really good levels already, and I don't see anything that's going to break that in the near term. When we get a little bit higher and we keep getting a little bit more oversold, we'll probably have to take some additional action. So I guess in conclusion, I think we're setting up for a really exciting 2022 that's probably going to be even more exciting than 2021 was. Because remember, a lot of the things that we hoped would happen in 2021 didn't, and a lot of the things that we hoped wouldn't happen, i.e. exports slowing down, perfect weather across the globe, huge crops, did happen, and we still didn't break this market. So the bullish case has yet to be unfolded because the fundamental cards haven't really pushed themselves to the forefront, but the bearish cards have, and the market's ignoring them. And I think that's a really powerful tell as we kind of wrap up 2021 and move into the new year. So with that, I hope that's helpful. I know that's kind of a big, broad, vague overview, but I think these markets look really good, and we'll keep talking about them over the next few weeks. Remember, there is significant risk trading futures and options, and you should only do so in light of your own financial condition. I will talk to you next week. I hope you have a great one.